This video is for educational and entertainment use only. The views in this video do not necessarily represent the views or life of Marlon.
Welcome back to Duffle LO to sit down. And like I said, we're still on the China. We're literally on the China videos, and this is fascinating. So I told you in the first video about the artificial moon. Told you guys in the second video about the artificial sun. They're creating all this energy, free energy for themselves, and they're saving all this money. Think about this: 170 million they save per year with the artificial moon, and let's say they save 500 million per year with the artificial sun. That's almost 700 million that they would save in 1 year, which means they can invest that 700 million, and in 10 years that 700 million will be 7 billion. That's just without them investing, it'd be 7 billion. But with them investing it, you have to understand that it's going to double, it's going to triple, it's going to quadruple. So they're going to make their money back. And once they sell it, this technology to other people, they're going to make their money back. But let's talk about some crazy stuff that's going on in China that you guys may know, may not know. But I found this interesting because you guys got to see this. Let me move me down. This is what we're talking about today. Let me move it up a little bit. From Bloomberg, Tuesday, which was yesterday, January 11, 2022. World's worst performing bank lent billions to China Evergrande. So if you guys are new on China Evergrande, Evergrande is a development company in China that basically defaulted on their loan, and they owe so much money that they couldn't pay their bills, and we're going to talk about what happened. So let's talk about this bank that the worst performing bank lent them billions. Like, how? It was once hailed as the future of Chinese banking, a privately run lender that would mint money by outmaneuvering its state-owned rivals. So they was doing some little finagling and everything, and they thought that it was the future of Chinese banking. But in reality, I think it really is. It's just, you guys got to figure it out. An ill-fated push into property lending has instead turned China Minsheng Banking Corp into one of the biggest casualties of the real estate debt crisis that's roiling Asia's largest economy. Because it's going down over there. Trust me, y'all, it's really going down. Because people are investing. They're investing into these investment properties, and the investment properties are supposed to have them a return, but because the development company that's constructing the developments, they're not able to finish the development because they ain't got no money. So it's mind twisting. Battered by mounting losses on loans to developers, including China Evergrande Group, Minsheng stock tumbled 31% in 12 months through last week, the worst performance in the 155-member Bloomberg World Bank's index. Hedge funds and other short sellers are more bearish on the lender than any of its global peers. Bearish, if you guys know the same thing about finance, you want to learn more about finance, you have to hit me up, and I have to do other videos about that, but that's going to cost a little finance to do that. But I'll give you guys this. Bullish means they want it to go up. They into putting their money into it and investing into it. Bearish means they also put their money into it, but they put their money into it that is going to go down. So when they bearish, the market is down. When it's bullish, the market is up. As easy as I can explain to you. And people familiar with Minsheng's operations say the bank, founded in 1996 as China's first non-state controlled lender, is now in damage control mode. Now think about this. China is a communist type country. The government controls everything. This was the first non-state controlled lender. Let me highlight that. Where you at? Come on, let's go. It was founded in 1996, and it was China's first non-state controlled lender. So now if it's the first non-state controlled lender and this situation happened, what you think gonna end up happening with this bank? The government of China is gonna bail the bank out, but when they bail the bank out, now it becomes a state-controlled bank. You guys gotta understand, this is chess, not checkers. It has restructured its real estate finance group to give more power to local branch managers, made reducing holdings of property debt a top priority for 2022, and plans to cut salaries for some staff by half. The people said, asking not to be named, discussing private information. Yeah, in order for them to help out on that bottom number, they're gonna have to cut some of the expenses. So salaries, hey, look, hey, we're gonna get it back, but we gotta take a hit right now. And I mean, I say it's a good investment if the people actually work for the company and they think that it's gonna get bailed out by the government and then it's gonna turn into a profit. You'll get your salary back. Especially they'll know that you loyal to the company because you took that salary cut and you still came to work. So that's how I look at things. Minxin's plight underscores the widened fallout from Chinese President Xi Jinping's crackdown on the property industry and other parts of the country's capital-hungry private sector. People over there trying to get a lot of money. It also offers a warning to global financial firms that are investing billions of dollars to expand in China. Bets that seem like sure things can quickly sour when the nation's policymakers decide to change course. Minxin has about 130 billion won, which is 20 billion US dollars, of exposure to high-risk developers, amounting to 27% of its so-called Tier 1 capital, the most among big Chinese lenders. Citigroup Incorporated, analysts estimated in a September research report, the bank will need years to work through its bad debt problem, and a capital injection from a stronger rival can't be ruled out, said Shinming, director at Chang Sun & Co., a Beijing-based boutique investment bank. That's what I'm saying. Now, see how they said a stronger rival can't be ruled out? Capital injection from a stronger rival. So that means the ops, somebody that's an opposition to them, will inject capital. So now let's say you getting ready to fail, your company getting ready to fail. Now I could either do a takeover, I could do a hostile takeover, or I can say, okay, I'll give you this money for this much percentage of your company. So now if you really, really need me, or you're gonna get ready and fail, it might be a hostile takeover. But if they believe that the company still has at least some wiggle room to make it out, they just can inject some and get probably like 10, 15, maybe 20% of the company. But if the Chinese government end up doing it, they probably gonna want 50% of the company. So I mean, it depends on how they want to do it. The pursuit of high growth and returns to its private shareholders pushed the bank to take on lots of high risk investments, and that's the bottom line. Every company is in business to basically make the shareholders of the company happy, because the shareholders is the one that's investing in the company, so they want a return on their money. So you got to do whatever you got to do to keep this company flowing and being a profit, so the shareholders can be happy, or they're going to withdraw their capital. And if they withdraw their capital, you might not have working capital to actually do the operations that you need to do. Minxin said in a response to questions from Bloomberg that it completed a restructuring of its real estate finance unit at the end of 2020, transferring some functions to local branches. Employee compensation is largely stable, the bank added. Chairman Gao Yingzhen, who joined Minxin from Bank of China Limited in 2020, pledged to address the lender's challenges at a shareholders meeting in June. 10 years ago, we were the pearl on the crown, but now our gap with peers is widening. Zhao said, corporate governance will switch from short-sightedness to long-termism. So rather than them thinking short-term, which a lot of people think, they think they're gonna put their money into the market and then tomorrow they just double their money. It doesn't go like that. But a lot of investors think like that. So rather than them thinking about the short, they're gonna start thinking about the long. So now there's still a good possibility that this could be the first non-state controlled bank to where they might do that. But then that means a rival will have to buy into them instead of the government to end up keeping them a non-state bank, which we'll have to see how that play out. I have to follow the story a little more. This isn't the first time Minxin had faced a reckoning after a period of rapid growth. In 2009, Dong Wengbao, who helped found Minxin alongside other wealthy Chinese businessmen, including pig feed tycoon Lu Yonghao and property mogul Lu Xingguang, orchestrated the bank's push into steel industry lending as part of a goal to become the most profitable bank in China. So when they doing a push for the steel industry right here, this is how they able to grow and do all this development, because the structure is made of steel. So when they already have a company that is doing the steeling, they have the steel for the structures that they're trying to build, because they have a company that's in on them to do it. So while Minxin's earnings surged, at an annual rate of nearly 50% over the next 5 years, a steel sector downturn ultimately led to a pileup of bad loans, and Dong left the bank in 2014. See, look, when you keep on thinking, when you understand stock or any type of market, when you see a straight line, you better know that's getting ready to come down. Like it ain't gonna just, it doesn't go like that. Minxin then pivoted to the property industry, which enjoyed several years of debt-fueled growth until Xi's government began imposing ever tighter curves on housing speculation and developers' leverage. As defaults began to soar, Minxin reported a 36% drop in profits in 2020, the most in at least 2 decades, and another 5% decline in the first 9 months of 2021. More pain is all but guaranteed. The bank is one of the biggest creditors to Evergrande, whose debt crisis has rattled global markets over the past year and sparked financial contagion across China's property industry. Evergrande is got everybody right now by the tail, because with China having, I believe, 50% of their GDP in the property, like they holders is in real estate. If they real estate tank, then they money tank. If they money tank, they probably start taking their investments out of other countries, which means the other countries gonna tank. So this is why this is a big deal. Minxin had about 29 billion won of exposure to Evergrande as of June 2020, according to a letter seen by Bloomberg that the developer sent to provincial authorities that year. Minxin said in September that its loans to Evergrande had dropped about 15% since June 2020, without specifying the level. When taking into account the bank's indirect lending to Evergrande through trust products, Minxin's exposure to developer exceeds 29 billion yuan. People familiar with the matter said without providing a specific figure. You see what they're saying when they start saying this? Indirect lending with the bank's indirect lending. So now direct lending is on paper. We all know we got the paper trail. You came in, filled out paperwork. That's direct lending. We know we lent this to you. But when they talk about indirect, that's just, well, go ahead and take some of this. Just pay me back on the back. That's what that is. That happens. So people got to really understand this stuff. Minxin said in response to queries from Bloomberg that its loans are all tied to residential projects. Understand, it's not commercial. None of this stuff. That's why it's going to lead to. That's why it's going to lead to the. I'm going to explain to you why it's tied to the residential projects, and it's not the commercial projects. Commercial property is the businesses, the tall skyscrapers, and all the lawyers, dentists, and all type of investment firms. They all working out stuff like that. The residential is where people live, the homes, the apartment complexes, stuff like that. With sufficient collateral, including land, properties, and projects under construction. So some of this stuff ain't even done, but we're gonna talk about what really ain't done. The bank said it hasn't invested in Evergrande bonds or cooperated through wealth management products or funds. Minxin had also been a major lender to other troubled developers, including China Fortune Land Development Co., Sichuan Langwang Development Co., and Tahoe Group Co. Its total exposure to real estate loans totaled 417 billion won as of June 30th, 2021. While that's down about 20 billion won from the start of 2021, it's still nearly double the level 5 years earlier. Adding to investor concerns are questions about Minxin's corporate governance. The bank has been hit with at least 3 fines exceeding 100 million won each over the past 3 years. So if they got hit with 3 fines, that means they got hit with a 100 million won fine every year, which means they're doing something that they're not supposed to be doing, but yet they keep doing it. More than any of its peers for regulatory lapses, including non-compliant developer loans and wealth management products. The bank's relationship with one of its largest shareholders, Lu China's Oceanwide Holdings Limited, has also raised eyebrows. Minxin extended a 21.6 billion won credit line to Oceanwide in December, even after the developer had defaulted on the dollar bond. Now think about this. How is you lending 21.6 billion out when you just defaulted on a bond? So you ain't paid what you had to pay for the bond, but you still lending money out. Let me give you this example real quick to break it down. I'm lending $10 to you but I owe somebody else $5. And I wasn't able to pay them their $5, but I got 10 to lend to you though. That's what that is. The bank has said it maintains strict monitoring measures for Oceanwide and will control risk by strengthening its collateral. Many of Minxin's challenges have arguably been priced in by investors. The bank, which has a market capitalization of 25 billion US, trades in Hong Kong for just 0.2 times reported net assets, the lowest level in Bloomberg World Bank's index. JP Morgan Chase & Co., the biggest US bank by market value, has multiple of 1.94. We almost done. Credit market suggests Minxin will weather the real estate downturn without a liquidity crisis of its own. The bank's one-year negotiable certificates of deposit have an indicated yield of about 2.77%. 2.77% on like 400 billion. Hey, that's a lot of chinga. Only a few basis points higher than peers, including China Merchants Bank Co. and Ping An Bank Co. Minxin stands to benefit if Chinese policymakers continue their recent easing of curbs on the property sector, a shift that has already helped the bank's stock stabilize in recent weeks. So basically, if the government don't keep on putting all these little tariffs on the residential and the real estate sector and making people pay these fines, then the companies will do better, because when they got to pay out that money, that's money that they could be using to try to make sure that the development is okay. Minxin has pegged its future growth on retail banking and lending to small businesses, areas that, for now at least, enjoy support from Xi's government. The bank has hired several high-profile executives from rivals to lead this transition. Yet Minxin faces an uphill battle to become a formidable player in consumer banking. Its retail customers' assets totaled 2 trillion yuan in September, compared with 3 trillion yuan at Ping An Bank and 10 trillion yuan at China Merchants Bank. So they got money flowing over there. But notice what they say. Consumer banking. This is like credit cards. So because everybody is study buying stuff, everybody need this, everybody need that, everybody needs some of this. The clothes, the shoes, the cars, the house, all that stuff, that's consumer banking. We're gonna lend you these lines of credit, or we're gonna give you these credit cards for you to do what it is that you want to do, but you got to pay us back with interest. Meanwhile, short sellers are betting that Minxin will face more turmoil as China's developer crisis drags on. Wagers against the bank amount to 8.6% of shares outstanding, nearly double the level at the second most shorted firm in the Bloomberg World Banks Index, according to IHS market data. The turning point for, you see this? Short sellers are betting that Minxin will face more turmoil. You guys need to pay attention to the movie called The Big Short. Like I told you, when there's a bearish market, that means the market is going down. Some people will short stocks. When they short stocks, that means that they're betting that this stock will go down. That's how you short a stock. So watch The Big Short and you'll get a better picture about what I'm explaining. The turning point for Minxin could be a long way off, according to Chancellor Nicole Shin. With the risk of private developers growing, it will take at least 3 years for Minxin to clean up its bad debt, Shin said. So they don't plan on going away. They don't plan on going in nowhere. Excuse me. So even though they lending to people that might not have the money, and then they lending out money, even though they defaulting on their bonds and all that, they don't plan on going nowhere. They plan on still being around. Why? Because if we have to, we're gonna partner with our. If we got to, we're gonna partner with our, because we're gonna stay in business, because they understand what's coming. Because they understand what's coming and what's going to happen, that's why they're going to stay in business. No, we ain't trying to leave out the game right now. We know what's coming. So speaking of what's coming, and they talking about residential properties and development and all that stuff, let's get into the next video so I can show you guys what I really, really want to show you guys. So hopefully you guys learned something in this video. Hopefully you look up some of the things I told you to look up. Hopefully you paid attention. Hopefully you're seeing some things. Hopefully you kind of, that sounds familiar, or that kind of sounds a little interesting. Hopefully you guys did something like that. But other than that, prosper through adversity. Definitely. Don't underestimate family, friends, lovers, enemies. Look objectively, no matter what city, state, or country is in, every hood is the same. If ain't nobody told you they love you today, I'm going to tell you right now that I love you, because I truly do. And like, share, subscribe, and hopefully you guys learn something today. That's all I got to say.
This video is for educational and entertainment use only. The views in this video do not necessarily represent the views or life of Marlon Dixon.